The basis step up at death. If mom sells now, she pays tax on a $650K gain. She was house rich, cash poor, and selling that home to get the cash would trigger a huge tax bill. Imagine having to choose between life-saving cancer treatment and paying a $162,000 tax bill. That's the impossible choice one family recently faced. A 60-year-old retired mom needed $70,000 cash immediately for an alternative treatment in Tijuana. Her only significant asset? An inherited, paid-off home worth $1 million. The problem? She was house rich, cash poor, and selling that home to get the cash would trigger a huge tax bill. In the next few minutes, I'll show you the two simple, tax-savvy moves that I propose to save them every penny of that six-figure tax bill and to preserve her two children's inheritance. Mom inherited the home from her parents when its value was only $100,000. That's what the IRS calls her cost basis. The home is now worth $1 million. If she sells it today, she can exclude $250K of the gain, which still leaves her with a massive $650,000 taxable capital gain. This puts her in the highest federal long-term capital gains bracket of 20%, plus the 3.8% net investment income tax and state taxes. Let's just call it 25% total tax. 25% of $650K means a $162K tax bill. If mom sells and pays that tax, $162K is gone forever, which means her children will ultimately inherit $162K less, all because she needs $70K today. Our goal is clear. How do we get mom $70K cash without incurring this massive tax bill? The core concept here is the most valuable tax rule for homeowners: the basis step up at death. If mom sells now, she pays tax on a $650K gain. If mom waits until death, the IRS steps up the cost basis for the heirs from the original $100,000 to the current fair market value of $1 million. When the kids then sell the house for $1 million, their gain is zero, and the $162K tax bill vanishes. We must preserve the step-up in basis. I propose two solutions to get the $70K cash while preserving the tax-free inheritance. First option is a reverse mortgage. Yes, the interest rates aren't great, but bad interest rates for a few years are far better than a $162K tax bill today. Contrary to common belief, a reverse mortgage does not mean the bank takes your house when you die. The bank only gets back the amount that is owed on the loan. The heirs get the remaining equity. Crucially, given mom's cancer diagnosis, the probability is fairly high that this high interest rate loan will not be in effect for many years because mom might pass away. It will be a few years of high interest, and then the heirs will inherit the house, sell it tax-free because of the step-up rule, pay off the small reverse mortgage balance, and walk away with a massive net gain. The second and often best solution relies on the children's assets. Have one or both of the kids take a loan from their 401k, maybe a home equity line of credit, and then gift the funds to their mom or pay the medical bills directly. This is a tax-free gift since the $70K is far below the current federal gift tax exemption. In the long run, the kids come out significantly further ahead. They may pay some interest on their 401k loan or HELOC, but that small cost is instantly dwarfed by the $162K in tax savings they've achieved by preserving the step-up in basis and inheriting more in assets. They're essentially saving $162K for a few $1,000s in interest. This case is a perfect example of why they call it personal finance. You have to analyze the tax consequences of transactions as well as personal circumstances, especially when time and health are involved. This allows us to come up with the optimal wealth preservation strategy.
Hey, my name is Arash. I help people create plans to pay less in taxes. Did you know if you like, subscribe, and comment on my videos, you will automatically save 10% in taxes? Okay, that's actually not true. Also, I need to let you know that none of this video should be taken as tax advice. However, I would love to give you individualized tax advice. All you have to do is schedule a consultation on my website, link below.